Hello, everybody. I am excited and esteemed to be hosting and moderating this panel on day 2 of the Pyth conference. My name is Steve Kaminsky. I am the lead of business development here at Douro Labs. Today's panel, Staying Liquid, Liquidity, and Market Making in DeFi. I will allow each panelist to introduce themselves, and we have a few questions prepared. I encourage the panelists, as I mentioned backstage, to please, feel free to comment off each other and make this a very interactive discussion. I'll just quickly mention the names on the panel. We have Kevin Yang, Managing Director of Gate Ventures. Gate joined the Pyth network in October of 2021. We have Ben Roth, CIO and co-founder of Auros, which joined the Pyth network in September of 2022. We have John Gu, CEO and founder of Alphalab, September 2022. We have Jordi Alexander, the founder of Selini, June 2023. And lastly, Vincent Liu, COO of Kronos Research, team that joined the Pyth network in July of 2023. So we are really grateful that you guys are all here. I'm going to allow each panelist to introduce themselves, and I'm just going on my screen here. So John, why don't we start with you?
Sure, yeah, thanks for the intro, Steve. So founder and CEO of Alphalab Capital. We're a prop trading firm and market maker within the crypto space. Started out, I think, like most everyone else on CeFi when there was no DeFi, and then very quickly expanded to DeFi during DeFi summer and later. So we were one of the launch partners for Compound, so very early. And yeah, very happy to be here in this panel.
Fantastic. Thanks, John. Moving over to my right, Kevin.
Yeah, thanks for having me here. So I'm Kevin Yang, currently the managing partner of Gate Ventures. So I guess probably you know about Gate.io. So we are backed by the crypto exchange. And recently we launched our second fund and accepting external LPs funding. So yeah, so interestingly, before joining Gate, I was also running DeFi strategies for a crypto asset management company before. So yeah, I know a bit about liquidity. So yeah, thanks for having me. It's my honor to be here. Yeah.
Thank you, Kevin. I will turn it over to Vincent.
Hey everyone, happy to be here. My name is Vincent, COO of Kronos Research. Kronos Research started 5 years ago. Bread and butter, high frequency trading. We're market makers for many exchanges, both from centralized to decentralized exchanges. We also have a VC team that invests in early stage founders. Yeah, so still trade a few $1 billion a day. Hopefully, bull market is just around the corner, and everybody will just have a better time trading nowadays. Yeah, thanks for having me.
Thanks, Vincent. Over to you, Ben.
Hey, Steve. Hey, everyone. My name is Ben Roth, co-founder and chief investment officer at Auros. My introduction is similar to John and Vincent. We're a high frequency trading firm founded 5 years ago in 2019. We trade, similarly to those guys, billions of dollars a day across predominantly CeFi, but increasingly in the DeFi space as well. Like Vincent, looking forward to a bull market where all of our volumes can go up and we can see the growth in both the decentralized space and growth in the centralized space as well. So happy to be here.
Thanks, Ben. Certainly, last but not least, Jordi.
Much appreciated, Steven. Yeah, good to be with everybody. Jordi, I'm the founder of Selini. Selini is about 3 years old. We started in early 21. We're about almost 40 people now. Globally, do a lot of high frequency trading, like the esteemed panelists here, and also I'm a very avid DeFi enthusiast. So I get involved as much as I can into talking to projects and designing stuff and tokenomics. And I've recently become a meth dealer. So anyone who's on crypto Twitter is going to see a lot of meth memes out of my account. Yeah.
Awesome. Thank you guys for those introductions. Where I wanted to start, and Ben, I'll turn this one over to you, is what's been really exciting about Pyth is it's attracted obviously some of the largest trading institutions in traditional markets as well as crypto markets. This particular panel is obviously filled with real thought leaders and experts in the crypto space, really crypto native. And so, I worked at Jump for quite a while. I was in traditional finance before that, but I would love to learn just a little bit more, starting with you, Ben, just what does it actually mean to be a liquidity provider or do market making in the context of DeFi or decentralized exchanges? I think a lot of our traditional institutional audience will understand market making in treasuries or US equities, but help us explain what being a liquidity provider or market making means in crypto in the context of DeFi. We'll start with Ben.
Yeah, it's a super good question, Steve. So, like you said, most people in traditional finance are familiar with the, say, central limit order book, right? Most financial instruments are traded on a central limit order book. Market making on that type of market structure involves placing bids and offers, and then trying to find equilibrium prices in real time. As there's more buying, prices will go up. As there's more selling, prices will go down. And the market maker's role there is essentially to try to match up buying pressure and selling pressure that comes with temporal differences. So the market maker will face the buyer at the point of the buyer, and they'll face the seller at the point that person wants to sell. But those points in time may be slightly different. They may be off by milliseconds. They may be off by hours or days. And market makers are typically there just to bridge the gap between those temporal differences. In the DeFi context, there are central limit order books, and the structure is somewhat the same as what people are familiar with. But really, where the biggest difference is in the concept of pools or kind of temporary kind of auctions. In the case of chains like Ethereum, which have block times that are not in real time or not measured in kind of milliseconds, but spread over a longer period of time, where the matching process is not necessarily on a price time priority, but there are other factors involved. And so providing liquidity in that context is, you've got passive liquidity providers in that context, which are those that participate in the pools themselves, and then you have active participants, which are those parties that tend to bring those pools into line with global pricing. So how we think of market making at Auros in the pools sense of the word, not the central limit order books, we're playing a similar game where we're trying to bring prices in line and try to normalize pricing across different venues, but you're using a different toolkit. You're not necessarily competing on sheer latency or pricing models. You're competing with a different set of rules, and often those rules differ by chain. And so we'll be deploying a completely different set of tactics on Ethereum, for example, to what we deploy on Solana, because the rules of the game across those chains are different. The regular user just sees pricing that looks relatively efficient, but under the hood, the tactics of the market makers are different depending on the chain, depending on the type of market microstructure that particular exchange offers. Probably toss it over to if there's different thinking there.
Yeah, John, how about from your side of the Alphalab perspective, just as far as like the meaning of being a liquidity provider or market maker on whether it's these different ecosystems and within DeFi, just building upon what Ben started with.
Sure. I think the fundamental meaning is sort of letting people transact when they want to transact with understood slippage, right? With certain impact that hopefully is minimal. And so one classic mechanism, as Ben had mentioned, is a central limit order book, which seems to stick around quite a bit. Within DeFi, there's some fundamental limitations to that. Basically, the throughput of on-chain mechanisms can't really support an active, or it's difficult to support an active central limit order book. So what you see now is a lot of hybrids where you have the matching off-chain, but the settlement on-chain. But I think the original kind of one of the things that kicked off DeFi Summer was a Uniswap model, right? Where people just don't have to do anything active. They literally put in the assets and the prices adjust based on some predetermined formula. And that has been proven to be interesting, like a great experiment. It enables, a composable building block that a lot of people have built on top of, and it's great. But it's also capital inefficient, meaning, the price impact can be quite high. It's kind of bad, or there's some debate about this, but it's been shown to be generally unprofitable for the passive liquidity providers. And it's also high fees, right? Generally, you try to account for the negative adverse selection of these pools with higher fees if you can. So, but I think since then, basically, it's been a similar model that's been iterated on, various formulaic adjustments to price, and then more and more people are bringing in Oracle prices, where the price at which things match is discovered elsewhere, mostly CeFi, but the trading can happen on DeFi. So I think basically the job of liquidity provision at the end of the day is to allow people to trade when they want to trade at reasonable prices and reasonable costs. The mechanisms for achieving that are very varied, and there's a lot of experimentation on DeFi of how to do that better under the constraints of DeFi's processing, which is great, and I think it's an ongoing experiment.
Yeah, that's awesome. Thank you. Jordi, it looked like you wanted to jump in there, and I am curious about the Selini perspective here, given your guys' entrance into the space.
Yeah, it's such an interesting time to be in DeFi. It's, the only equivalent right now is like being in AI, and you in both of those fields right now, there's just like a ton of developments happening, and they're going to change the world. And I think, with DeFi, obviously right now, it's a lot of experimentation. Like John said, we have people trying crazy stuff. We've seen a lot of it go wrong last cycle. I have a feeling like we'll see some stuff go wrong in this new cycle that's starting as well, I'm pretty sure. But we do learn lessons over time. I think, at least some of these like Luna stablecoin, some of these things will change. I love seeing the progress. Today I just saw, we have no affiliation, but like Avo is launching like a yield bearing collateral stablecoin. So you trade on the DEX and you're getting yield at the same time. Like, this is the kind of stuff that I think is kind of like just increase the performance of people trading on chain, and ultimately that's the end goal. We know where it all ends, and I think CZ from Binance said it very well. Even a couple of years ago, that we know where the end game. There is not going to be like a centralized Binance eventually. So we're excited to be a part of it. Pyth has done a great job. We've been on the kind of lookout for how the Oracle landscape will play out for a while, and yeah, I'm happy to be joining. We joined a bit late. We only joined this year, but happy to be a part of it.
Happy to be working with you guys as well. That's actually a good transition over to you, Vincent, which is understanding, a lot of the audience here is very familiar after yesterday's sessions and just kind of being a part of the Pyth ecosystem and the Pyth community as to what an Oracle is. But I'd love to learn from you guys, and Vincent, starting with you, just what is the importance of oracles for your business? Just trying to understand a little bit better the usage of oracles and how that fits into the context of trading, of market making, of liquidity provision. And yeah, Vincent, we'll start with you from the Kronos perspective there.
Sure. So, pretty much, follow up from the previous answers, market making or trading, a lot of times in the DeFi space, the core backbone is sort of just CeFi, DeFi arbitrage in a way, where, and then you kind of rely on CeFi prices, and then if there's deviation, you usually try to hedge, wherever, you see fit. So behind that, you definitely need reliable data source and data feeds, both on the CeFi side and DeFi side. Yeah, so I'm sure every firm spends a lot of resources to make sure that the data are clean, are efficient, are being used in all the trading in a non-stop manner. We as a firm, especially when there, for example, exchanges in the crypto space, even in CeFi, there are problems with data. Sometimes the exchange could drop data. It's not as reliable. For example, CME, where it's super reliable. So a lot of times, the trading, the data not only comes in the actual hunting, in the profit generation, but also in the risk management. Not only in finding trading, but also when data drops for a certain period of time, is that right? And would you want to cancel all orders, or would you want to continue to quote? So overall, I want to say trading is pretty much all about data. That's the essential backbone. And we're really glad to contribute to the Pyth network. We try to actively look at different exchanges where to contribute data, because at the end of the day, it will benefit everybody, all the players on this panel. Yeah, I guess that's any follow-up questions, happy to answer.
No, that's great, Vincent. Kevin, I wanted to get your perspective as well, not just perhaps on the importance of oracles in kind of the trading and DeFi and market making perspective, but also just broader kind of trends you're seeing in the infrastructure space, and what Gate is looking for, or what types of infrastructure are kind of most required for the space in which you operate. Kevin?
Right. Yeah. So we think liquidity is very important, and for decentralized finance, it's really important to have Oracle service. So before Pyth, so I guess more than 90% of the Oracle services actually went to chaining. And being a venture investor here, we think it's necessary to decentralize the middle layer, because you have different layer 1s, layer 2s. So this stuff we can classify as infrastructure. But meanwhile, when apps running on top of this kind of infra, you still need middlewares, and that's how the value comes to the Oracle services. So I think the crypto market has been learning for professionalism, offering financial prices, all kinds of data for a long time. And so when we noticed that Jump is launching the Pyth Network project, so we quickly joined the party, and we became one of the founding members of the Pyth Foundation. And meanwhile, because we're backed by a crypto exchange, and in the centralized business, so these platforms, usually they will provide the API connections, right? So you can have the data feed directly from the platform. But meanwhile, you cannot rely on the different kinds of the centralized platform, because you have the high quality stuff, but not all these platforms can have provide the standardized and high quality data. So I think for centralized business, for decentralized finance, and meanwhile for off-chain data, there comes the value for Oracle services. And usually people have been talking about decentralization for a long time, but I guess now is the time we need to ask for efficiency. And I guess professionalism lead to efficiency. And that's why we believe in Pyth Network, because you have the professional team and high efficiency, I would say. Yeah, thanks.
Thanks, Kevin. Yeah, no, and I agree, right? I think it's having a lot of the thought leaders and experts that are exactly on this panel helping to contribute to a piece of infrastructure that is what's going to help drive the space forward. Ben, could we perhaps build on that? I know you and I have discussed this before in one of the Pyth data provider Q&As that we did with Auros, but I'd love to learn just your perspective on what is the importance of low latency data for your business? How are you using oracles like the Pyth network? Just talk to us a little bit about that kind of view of infrastructure.
Yeah, I think touching upon what Vincent said, like data is really data. I'd say an HFT firm, it's data and execution are the core things that determine success. There's a lot of stuff that kind of goes into those, but if you had to break it down into two areas, it's quality and speed of data, and then quality and speed of execution. So on the data side, I think when we joined Pyth, we felt that we were a bit late. We had a bit of FOMO when we saw what you guys were building. I think it was towards probably Q2 of 22, and as soon as we read about it and thought how we could contribute and what our vision of the future looked like, it became obvious that we needed to jump on board and help you guys build it. We publish for most every symbol, I think, in crypto now. Well, there's probably a handful that we're not publishing, but for the most part, we're kind of leveraging on our capabilities to publish everything in crypto, and we think that is going to be the future of how, like what Kevin said, kind of decentralizing that middle layer, right? Having the scale and reliability and speed of kind of the middle layer stuff, which I would classify as kind of data, is going to be core to growing. Right now it seems to be that it's a bit of a walled garden, and if we want to grow the space and really bring in big money and make it kind of ubiquitous in life, it's going to need reliable and speedy data. I know John touched earlier on the limitations of blockchain, and that's probably why it's taking so long to kind of gain widespread adoption, is that you're going from centralized solutions, which can be very, very fast. When you have something that's centralized, it's very, very quick, but it has its natural pitfalls, right? And going immediately from that to the utopian solution is just not, it's not possible. And I think some of the earlier, I've been in the industry for 6 years. Some of you guys may have been in for longer, but I remember when I joined, everything I heard back in 2017 was, we're going to change the world and we're going to change the world tomorrow. And it's just not realistic. You got to step your way there. And I think we're a little more pragmatic and realistic about it, about what the future kind of holds. And we've now got the tools and I suppose the understanding and the realization that there are benefits to decentralization, and there are things that it will never solve, and going and attacking the stuff that it can solve, and solve in a better way than centralized solutions, is a much more beneficial path than saying, hey, we're going to change everything tomorrow, we're going to change the world, because that is actually not particularly pragmatic or realistic. So when it comes to like data provision, I think that this type of model of being able to have, I suppose, carriers of efficient data from other sources, which would be everybody in, I suppose, this call, and then placing that in a trusted location that with enough scale then becomes decentralized in and of itself, and then having that kind of then span out to all the use cases is a pragmatic solution for kind of a difficult problem. And so we think the model works, and we think that as it grows, it will scale very well.
Yeah, it's very, very well said, Ben. And I recall some of our earlier discussions and with other trading firms and market makers as well. It's been really interesting. A lot of the contributors to the Pyth network kind of started their interest or exploration into the Pyth ecosystem because they needed to use oracles, right? They needed to use the infrastructure. They recognized the use case of that data, and then realized actually we can help contribute to it. And I think that, the impact of being able to contribute to the infrastructure that ultimately you will be using, and perhaps even people in this group will be competing against each other for, is really powerful. And so I think that's a really exciting point. Maybe for John and or Jordi, kind of building upon that, since you both alluded to it, what are some of the other challenges that you're seeing right now as far as like execution and or adoption within like the DeFi space? Pyth's come a long way, but certainly has a lot of work left to do, and there's certainly other pieces of infrastructure in the space that could likely use improving. So I'd love to get your perspective, John, first, and then maybe Jordi or whoever wants to go first.
Sure. It's interesting. We kind of talked about maybe not explicitly, but implicitly sort of using Oracle for prices is kind of an admission that the price formation process actually happens somewhere else, right? So Oracle is fundamentally kind of connect the real world with the truth of the real world with kind of what's on the blockchain. Prices happen to be like a nice convenient thing because trading is one of the big use cases, but it could apply to other things. To Ben's story, I remember back in 2017 when people would talk about the blockchain, they're like, we'll put out the blockchain and it'll be the truth. And I was like, wait, you can't just put real world stuff on the blockchain and assume it's true. But I think to your question, one of the pieces might be when designs get interesting enough that a big part of the price formation process happens on chain itself, right? And that becomes a very interesting proposition. So I know. We also talk about certain. So just an example, people have talked about sort of putting real world assets onto the blockchain, and often real world assets trade during normal hours and not on the weekends. But suddenly, if you have a tokenized representation, let's assume you can actually access it publicly. It can trade 24/7, and then maybe on the weekends that become a primary source of truth, as opposed to being something you ship on chain from somewhere else. So I think one of the interesting aspects is how we can make it so that price discovery, the on-chain trading contributes more to the actual price discovery process. So that's kind of a bit of my thinking.
That's what we had. If you rewind 40 or 50 years, right, with in financial markets, price discovery happened in the pits and it happened in the physical market, and now most price discovery for most assets happens electronically in a derivatives market. And I think that's probably a similar path, and hopefully a similar path that will follow here. You'll set up the plumbing for that price discovery to occur, and then gradually more activity will flow to like John said, like if Apple's stock is tradable on a weekend and over 24 hours a day, 7 days a week, you may end up with a large amount of the price discovery occurring in the venues where it can be traded 24/7, which will be in tokenized form.
Earlier this morning, I was listening to Vlad, CEO of Robinhood, on CNBC talking about 24-hour markets, and I almost thought he was going to mention Pyth. We were so close. Jordi?
Yeah, I mean, there's definitely a lot of challenges with DeFi and oracles. I mean, everyone here, I know for a fact, has gone through battles and we all have battle scars, and we're the survivors, right? Like, there's a lot of people who died along the way the last few years. So everyone here is taking scars. I mean, even Pyth, I remember you guys launched, and I think there was like some disparity on Solana. Like, you didn't take an average, or there was like instead of a median, it was like a mean, and then like some price went off. I remember we've all kind of had to adapt and keep learning. And on-chain is a dark forest. I love that phrase from that original article about Ethereum, and it really is. I mean, so many exploits and so many things going on, and the reality is, like, derivatives, things like perps, they're a great hit. They are the most popular thing in crypto, but they rely on like John said, like it's kind of broken in a way because they rely on like the spot market potentially like having the price discovery, and then the derivative sort of is following it, but sometimes the tail's wagging the dog, and you need a lot of robustness. We're seeing on Binance, some of these exchanges where somebody takes control of the spot market and then just traps the larger derivatives market, gets like a -2% per window, like, and it just kind of squeezes them. Like, there's all these games in perps that are not there in traditional calendar futures that some of us are used to from previous years. So you need the robustness. You have to be careful in this like dark forest. There's a lot of challenges, all kinds of exploits. We saw the Kyber one recently. Like, that was a wild one. So yeah, we have to all kind of be careful. The reality is, what we really want is like a healthy market, and that means nobody has like a huge advantage over everybody else. Unfortunately, like, on the AMM side, we're seeing like Jared from Subway, or like one guy is just like winning all the flow and he's getting everything, and it's not a very like healthy, nice market. Like, you want everybody to have a shot. The thing I do like about DeFi and like about crypto coming from traditional markets is the latency, like, variance is higher, and you don't have this like on a Eurex, it's like how many is it, 4 nanoseconds or 3 nanoseconds, and you're just like fighting this all or nothing like fight to like the nanosecond. And here, as long as you're in the game, you have something within the variance, and you have like a good pricing that you can participate, and it makes a much nicer ecosystem, I think.
Jordi, build on that a little bit, because I think a lot of the audience who are more native into the crypto space may not be as familiar with like market data in traditional markets. So can you just expand a little bit? You mentioned like Eurex, like what has your experience been in kind of like operating in those centralized exchanges in traditional markets, and then coming into like DeFi and crypto markets from like a data perspective? Just educate a little bit.
Yeah, from a data perspective, it's a two-sided sword. Like, there's the fairness, which is everybody, in most major exchanges, CME, Eurex, all this stuff, you get connected with equidistant cables. So everyone's, in essence, getting the market data fairly. And then it just becomes this like fight for that tiny advantage that will make all the difference. And then, HFT firms end up in this massive spend. Like, Jump is doing ASICs, and then the next, it just keeps going. Thankfully, with crypto, you don't need to be like, a new firm like us, we don't have a Jump behind us or something like that. And, we're able to just have a solid kind of process and be competitive, because there aren't those entrenched advantages that those guys have after like, 10 years of massive spending on DD. So you can be more creative. And I think ultimately on the decentralized side, there's such a diverse group of participants and different coins that they want and different products, and everyone's trying stuff. And it really allows, like, I just love these years. I feel like it's going to go away in 10 years, but like, these next 5 years, there's just so much like things to try and explore, and people can specialize at different things. I'm sure all of us here are, a little bit specialized on different parts of the stack and everything else.
Yeah. If I may just add on to something that Jordi was saying, I think Jordi mentioned a bit in passing about this tail wagging the dog, right? Where you have these sort of implicit feedback loops, and I think they become especially severe with DeFi, where you rely on some assumption. So here, one of the assumptions is that the data you see from some other markets is okay, not manipulable. But when a bigger pool of capital comes to rely on that assumption, it's no longer the truth. So I think GMX, we saw a few exploits where people manipulated the underlying prices and lost money in that manipulation of the underlying prices, but made money on GMX because they timed the trades according to that manipulation. So this really happens. You sort of see it in TradFi too, like credit default swaps. People kind of engineer, when you have big betting markets on sort of the health of a company, people engineer defaults or non-defaults or whatever else. But I think DeFi is particularly susceptible to this because all the mechanisms are tied programmatically. So when you have Legos building on top of Legos and without questioning of the underlying assumptions, I think if one of the bottom things topple over, a lot of other things topple over. So I think this will be an increasing challenge we see as more things are composed together in DeFi going forward. So I anticipate that's a big challenge.
CDO squared all over again, right? Where the actual source of truth is, orders of magnitude smaller than the number of bets that are placed on that source of truth.
Right. Yeah. Absolutely. Yeah.
Kevin, I wanted to just jump back for your perspective on the venture side as well. Like, what are you seeing in this kind of new wave of DeFi adoption, and are there pieces of infrastructure that you're focused on, whether it's in the Oracle space or not? I'd just love to get your perspective, jumping back a minute there.
Great question. So I would say two keywords. One is derivatives. Second is user experience. So yeah, if you look closely at the crypto history, so previously we have the similar business model developed for the centralized crypto exchange. So usually they come first with the spot trading function, right? And later, nowadays, the volume on the derivative side is more than 10x than the spot volume, right? And I'm watching the similar trend in the DeFi sector as well. So I believe in the coming months, we are going to have more perpetual swaps, options, etc. All these kind of derivatives delivered on chain. So previously we have the GMX, and this project actually inspired a lot. For example, Synthetics, they're also building the similar derivatives trading platform as well. And plus smoothly user experience. So I would say we're going to have decentralized FTX in the following years, but for the good part, like cross-margin functionality, etc. So yeah, so everything put online, put on chain and self-custody. Meanwhile, you can take high leverages, and I guess yeah, that could be the magic for the DeFi in the following years.
Thank you. Vincent, wanted to go back as well to, we've received a lot of questions and just the general trend of kind of real world assets coming on chain. Pyth, as you guys well know, supports more than just crypto assets. Pyth supports about 400 symbols, including crypto, but also US equities, ETFs, metals, commodities, soon to be launching rates. Kind of just curious your perspective, Vincent, on real world assets, other types of assets coming on chain, how like more crypto native and crypto experts like you guys will be participating in that. So just riff on that.
Yep. Yeah, like you said, more and more, real world assets are coming on chain. And as a trader, a market maker, always thinking, the first thing we're thinking about is, can we trade it? And of course, they need liquidity. So, as a market maker, how can we provide liquidity? It will take more effort because you need to examine not only the on-chain part, but also the off-chain part. How they set up the legal entity, where did they set it up? The regulatory considerations. If it's something like tokenized treasury, what's their liquid portion? A market maker heavily relies on creation and redemption to like properly provide liquidity, to have the capital efficiency, to be able to capture profits. So as we are start talking to some of these projects, we really look at everything end to end, even have legal lawyer involved to get their perspective. Hey, even if they guarantee some kind of a price like protection, does it even make sense? Can they so it's a lot of work. However, we're also just happy to be part of it, because we do think that it's an important path towards the future. And I guess maybe slight off topic. Even at my previous life as an option market maker, when I was trading the Nasdaq, we have Oracle issues. Like by that, I mean. For example, I remember one day we just saw all the Friday in the morning puts start getting offered like crazy, and then like this screams, like a dividend is off, and then we immediately check Bloomberg. There's no news, nothing, and then realize that somehow another market maker got the news first, or like have some kind of info, and then start just slamming the market, and also quoting out through all the brokers, right, try to pick people off. I think one important thing we're trying to do here, I guess Jordi also mentioned, just try to have a healthier playing ground, kind of compete, with each other. And I think, with RWAs, Oracle, like when we have those kind of issues in TradFi, here and there, and then everything will be magnified when we, have the RWAs. So how do we making sure, the things work properly? It would take a lot of work. I mean, I'm pretty sure we're gonna get picked off, here and there, but we just hope that it will get better from here. So.
Yeah. Ben, Jordi, anything to add on real world assets or just kind of other types of adoption or assets coming on chain?
Yeah, I'd just echo what Vincent said. Informational asymmetries are going to be difficult to overcome. Regulated assets, regulated industries that require certain rules around disclosure. That's going to be a tricky bridge to cross. But yeah, I mean it's all been difficult, and you kind of just got to step your way in and work out each problem as you go. But yeah, definitely as a market maker, informational asymmetries. I've been on the same side as that you have, Vincent, with weekly in the money put spreads before, wondering what the hell's wrong with this dividend, and then finding out after the fact. Well, after someone's put a bit of risk on against you. So I think that's probably going to be the thing that we need to work on the most.
Yeah.
Yeah, fully agree. I think there's a lot of challenges that we have this like RWA, people pump the coins, whatever. But when it comes down to the challenges that a lot of these things will implement, I do think something like commodities, it's an international market. It's not tied to a specific country. Eventually, we'll find some way where there's like a blockchain trading component to that, and especially if things like the Middle Eastern countries start getting very into crypto and Bitcoin and blockchain, they might potentially start to push for energy-backed currencies, stuff like that. So it'll get interesting, but it's going to take a while.
Yeah. Anybody else on that? All right, we have a few minutes left. Let's wrap up with a lightning round. So we're just going to do a quick question or two, short answers if you can, and I'll just do the order in random. So I guess the first one would just give us like a hot take, something that you're thinking is whether it's a prediction or a reflection, prediction for 2024, reflection for 2023, kind of hot take, crypto, DeFi specifically, or crypto generally. Who wants to start? We'll just go around. Anybody got one? Everyone's afraid to make a hot take.
I can go first.
Go for it.
All right. Yeah. So my hot take would be Bitcoin's domination would be much higher than the current situation, and the Bitcoin ecosystem is trending pretty well. So I guess there will be even smart contract functionality achieved by all kinds of Bitcoin layer 2s, and they're coming next year. So personally, I think it'll be awesome if Pyth is going to support these layer 2s and this infra on Bitcoin ecosystem. And yeah,
I love it. Hot take and suggestion for Pyth. I like that. Ben, you're up.
Gosh, I'm going to say one that's slightly controversial. I think the current bull market might be a head fake in the near term. Sorry, I hope I'm wrong, but that's my head fake.
Cancel his mic. Cut his mic.
Further to go before we just go to all-time highs. Sorry, folks.
Vincent,
it's good to be wrong. It's good to be wrong about those hot takes. So
it is a hot take. Yeah. Vincent, what are you thinking?
Not really a hot take, I guess, but something just pop up in my mind here and there is that crypto still relies on internet, and then given all the we've seen regions without internet, especially like countries that heavily rely on digital or like transactions rather than cash, physical cash. Seeing the cities without internet for a period of time, then people couldn't even buy things. And then the crypto still relies on internet. I know there are different solutions, but just will be interesting to see how far that area goes, I guess. Yeah.
John?
Yeah, sure. I guess I think we'll see further fragmentation of the market, all right, especially with institutions entering. I think we're going to have KYC concerns. We're going to have permission pools. And I think it's a bit, opposed to the open nature of blockchain in some way. So I imagine the community might not like it, but I think it's sort of a necessary step to take for institutions to get comfortable with these open sort of blockchain networks.
Right.
And I think in the long term, it could it could be quite powerful.
Yeah. Jordi, want to close this out?
Yeah, I'm going to get a little bit spicy.
Thank you.
So, all these like little dexes and all these coins, they're all casinos. Like that's kind of what we're dealing with. The speculation, it's found a global audience because in our DNA is like primates. We want to get rich quick. That's like the way to procreate and survive. So, what comes out of that though is like actual innovation. So we've seen that. On like the tech side, a lot of the VR, all this stuff, it comes from like the porn industry, right? Because there's like a lot of primal nature, just like there is for like, speculating and gambling. There's also for, that stuff. And a lot of the advancements in that space came out of like, oh, we should make a really good version of like porn, let's say. And I think similarly, like my hot take is that all this like, casino stuff and all this speculation, all this stuff, we will have a lot of these innovations like perps, but I think other things as well that will, I think in 2024, start to feed into like the mainstream. Of course, Bloomberg has a crypto section and all this stuff, but I think even more and more the things that we're, innovating and discovering in this like crazy space will start to like take over, the normal headlines of financial media. So I think the two worlds are going to start merging.
Awesome. Jordi, Ben, Vincent, Kevin, John, thank you guys sincerely for joining this panel. I learned a lot. I hope the audience did. I appreciate you guys for participating. I know we're all over the globe here. And also appreciate all of your contribution to the Pyth ecosystem. I know I speak on behalf of the community when it's awesome to see experts like you guys contributing to the space and helping to build infrastructure. So thank you to everyone for listening. We have a 13 or so minute break. The next keynote will be from the Gelato team coming up in about 13 minutes. So thank you guys and enjoy the rest of the conference.
Thank you.
Thanks, everyone.